With Tesla's stock rising to all-time highs, the firm may now be valued at $40 trillion. Hi everyone, and welcome back to our comprehensive guide on Tesla stock. Which opportunities have the potential to bring this about? Even still, Morgan Stanley's Moch 5 Thoughts on the Mother of All Capex Cycles research report is where the bullish forecast comes from. It's surprising what a respectable organization like Morgan Stanley had to say. We will also disclose in this video the reasons why Tesla will soar to new heights thanks to this $40 trillion potential. Stay tuned to the conclusion to discover out. Before we begin, though, please make sure you subscribe, like, and set on notifications if you enjoy this kind of content. This will ensure you stay informed about all the news and updates regarding Tesla. Morgan Stanley is a global provider of financial services with a focus on wealth management, securities, investment banking, and investment management. With offices in more than 41 countries, the firm's staff members provide global clientele services to people, firms, governments, and organizations. By March 31, 2022, $1.4 trillion in assets were under administration or supervision by Morgan Stanley Investment Administration and its affiliates in investment advisory, with over 1,200 investment professionals globally. A wide range of clients, including governments, institutions, businesses, and individuals, are served by Morgan Stanley Investment Management's superior long-term investment performance. And research by Morgan Stanley indicates that Tesla Incorporated is still the clear frontrunner in the race to develop electric vehicles. The company is probably going to be the first in the auto sector to move away from the fossil fuel economy. Adam Jonas rates the Tesla overweight with a price target of $1,300. According to Jonas in a note, investors should be wary of Tesla because it is both pricey and inexpensive at the same time. The study suggests that the company may be overvalued if it is considered a pure vehicle company and its appraisal is based only on the number of units sold multiplied by the average selling price of cars. The automotive industry as a whole may have a significant impact on the reshaping of the transportation and renewable energy sectors if, and only if, it makes the shift to electric vehicles. Morgan Stanley calculates that, in order to move away from fossil fuels, $20 to $40 trillion in total capex and R&D expenditures will need to be made over the next 20 years. For Tesla, though, this is where things start to get interesting. This is a big financial amount. Furthermore, the fact that conventional automakers have a substantial industry focused on internal combustion engine vehicles is our primary issue with them. With this enormous commitment to EV, legacy manufacturers are trying to please two masters, but they can only please one. Additionally, they will file for bankruptcy if it isn't EV. According to Morgan Stanley, Tesla might be significantly undervalued if considered an onshore infrastructure provider for renewable energy. With a $1 trillion market capitalization at its disposal, they view Tesla as the pinnacle of battery capital expenditure investments. According to Morgan Stanley, two significant events, war and inflation, will spur new innovation in the energy sector. In the next 6 months, they predict, things will happen that will drastically change the story of what Tesla does, the markets it serves, its growth trajectory, and the global strategic implications of the ecosystem it is a part of. Morgan Stanley believes that while established automakers are prohibited from doing so by strict state dealer franchise restrictions, investors are starting to appreciate Tesla's advantages in going directly to customers. Here's another thing we both agree on. Tesla is free to sell cars whenever they want. Older dealerships with dubious sales tactics, extra alliances, and bureaucracy are all used by legacy automakers. Morgan Stanley thinks that as globalization ushers us into a new era characterized by heightened concerns about national security, there are bigger forces at work that are propelling the new multi-decade trillion-dollar cycle in battery capital expenditure. The infrastructure that supports new energy sources must be taken into account by investors. In the future, battery storage will be essential, and Tesla is ready to take the lead. Musk has stated that Tesla will start their own mining operations, either by buying out mining companies or by starting their own mining operations from scratch. According to Musk, Tesla will be able to create more batteries than anyone else. The fact that Morgan Stanley is taking Tesla's possibilities into account outside of the auto business is comforting. Their earnings per share projections and price objectives, however, are confusing and much below where we anticipate them to go in the upcoming years. Fans of Tesla are renowned for having high valuations. Renowned Tesla bull Ron Barron thinks the company will return 3 to 5 times its investment in 10 years. Based on Cathie Wood's 5-year projection, The market capitalization is estimated to be $3 trillion. Musk. It produces respectable sales for the quarter, showing a notable year-over-year increase in sales over the previous quarter. With 305,000 vehicles produced and 310,000 delivered, Tesla produced about 1.2 million vehicles annually. Car models. The S and X model, roughly all new car production and deliveries have stopped, and 17% are subject to lease accounting. Until a new model is released, the company's high-end segment is largely idle. Although there's a chance that Tesla's new Roadster will help revive this segment of the company, it didn't, and there are no signs that it will anytime soon. The company raised a lot of noise about the upcoming Roadster, and the release date has been continuously pushed back. As of right now, 2023 is the estimated date. It's unclear if it will happen in the upcoming year, but Tesla has a track record of missing deadlines. But until something happens, the business means nothing to Tesla. The Model S and X that came after it, in our perspective, are what made Tesla the company it is today. However, sales currently make up a very minor portion of the company's operations, and the company hasn't witnessed strong performance in a long time. For the company, they barely total a few $billion annually. According to Jonas, investors will become more aware of how crucial manufacturers like Tesla are to the shift away from fossil fuels and toward renewable energy sources during the course of the upcoming year. The researcher estimates that during the next 20 years, between $20 trillion and $40 trillion in cumulative capital expenditure and research and development will be directed toward achieving this aim. Only 3% of this, he claims, has been allotted and 1% has been spent thus far. Tesla just updated its model lineup, but volume sales are still low. Considering the growing top-tier competition in the EV market from firms like Lucid, Rivian, BMW, and others, we don't see this position changing significantly. Next is self-driving cars, such as the Roadster. The opportunity here, in our opinion, is just vapor. The most similar business is Meta's metaverse venture. Maybe there may be a huge market one day. Yes, exactly. However, until then, it's unclear whether it will even have a respectable market share or exist at all. Tesla's entire self-driving timeline has been continuously delayed, frustrating customers who paid premium packages expecting it sooner. The company has lost money as a result of basic strategy design errors, such as the absence of customer testing or LiDAR, and it may never be able to overtake its rivals. We finally reached the Model 3 and Y right now. Tesla's business is built around these inexpensive models. The great majority of the growth in production is attributed to them, as they produce over 1 million automobiles annually. These businesses are enormous on their own, and competition among EVs is intensifying. But up until now, the big companies have been the competitors. The company anticipates producing over 2 million cars annually by the end of 2022, primarily from these vehicles. As competition increases, we see Tesla becoming a mass-market manufacturer. With 40 million cars sold annually in a $280 billion market capitalization, Toyota, the industry leader in dependable, affordable automobiles, is a good indicator in this case. Residential solar and energy storage are two of Tesla's other businesses. Particularly badly affected is residential solar, which now only has a 2% market share. Simply put, the business has lagged behind the solar industry as a whole. Roof solar seems to be a little but developing business. Here's where the corporation hopes to increase profitability. However, with 345 MW of residential solar projected for 2022 and deployment costs of $2.3 million per MW, our industry is very competitive, lacking any meaningful market share, and earning only $1 billion in low-margin revenue. Clearly, the company's energy storage segment holds more potential. The company's growth has been much more steady, and it has installed about 4 megawatts. Given the ever-increasing demand for batteries, its Megapack approach is somewhat unique. According to its most recent pricing announcements, Tesla charges about $300 per kilowatt-hour with an estimated $1 billion in revenue. Thus, it is evident that Tesla is succeeding both now and in the future. In this industry, we do not think it is a $1 trillion company maker, though. Demand is expected to surpass 1 terawatt-hour by 2030, yet there are little margins and little protection for intellectual property. Assuming a 100% market share, Tesla's revenue is expected to reach $300 billion. What are your projections for Tesla, though? Tell us in the space below. Thank you for observing. Go ahead and click on one of these 2 videos to view it on your screen while you're still here. I'll see you over there.